Well, I have so much to talk to you guys about that I did not cover in yesterday's video. We have about 2 months left. It's going to get bad. Buckle up, Buttercup. But sorry about yesterday's video because I got zero sleep. And just in case I did not say cue the fire, and just about everything that I am going to talk about or share with you, now we go back in time. We go, oh, the panic of 1837. Oh, the Great Depression then. What does it look like now? It's still, guys, we are like on the cusp of everything's lined up. And I'm going to show you in the charts and you're going to go, wow, oh, sorry about today's stock market. There's Bloomberg. Oh, hey, housing market. Lines up perfectly. What's wrong with the housing market? Oh, paralysis. Oh, what else is going on? Oh, the banks, Jamie Dimon. No, you're coming out again? We're talking about what caused everything, what's gonna cause it now, what is causing it now, and how everything just repeats and repeats. 80 years, 7 years, and here we go. So make sure you guys have your floaties on because you're gonna need them. And we're gonna start in 1837, the good old years when you could get a Coke for a penny. But 1830, and then I could bump it. We can bump it up to 1770, or bump it back to 1776. War. 80 years later, war. 80 years later, war. 80 years later, war. 2022. Oh, war. I'll get there in a second. We have history. You don't need the history. We just repeat. That's it. What caused the panic of 1837? And again, rewind it, move forward. As a general rule, banks printed more paper money. When precious metals accumulated in their vaults, the money supply in the United States grew to an average or annual rate of 30%. Can you imagine that we grew our money supply 30%? Do you know what we just grew our money supply? Well, let's just say a hell of a lot more than 30% in the last 2 years. And now, whoa, looky here. What happened? Inflation ensued. And what else happens? War. Coming from Harvard Business School, a lot of friends went to Harvard, didn't go to Harvard. That is one school I didn't go to. 1837, the hard times. 1873, off the rails. We got 1929, the Great Crash. Well, what happened in 1837? Well, why don't we read and see? Oh, we have 1837. I'm going to zoom in on this so you can see it. A real estate bubble? Oh my goodness. Well, thank goodness we don't have a housing bubble. Whew. That was a close call where you pay $1.5 million for a one bedroom. Housing, this is right today. Here it is. Engulfs U.S. buyers with prices starting to fall. Yep, that is the roller coaster that we are currently on. And I've been telling you, it's time to buckle. And also yesterday, I was telling you when it comes to planets, all the planets, this happens every 80 years. They're all perfectly, this 30-month cycle, all lined up perfectly. What we did in 2008 and in 1929, remember? The Great Depression? Well, let's take a look. It started on actually Rosh Hashanah. You're like, you're terrible. Your Hebrew is horrible. My apologies. Do you see? I haven't, right there. What are we going into this week? Right there. How much did the market? This was 08. How much did it lose? Let's just take a little gander from the top, right there, to the bottom, roughly and very quickly, almost 55%. And my apologies for my other lines that are up. This is on the monthly. Good little swing trade on the monthly. That's where you put in your buy. My goodness, if you're taking advantage of my course on swing trading, you should take the discount down below. So when you can right click, short it on the way down if you want to. Comes above my Bravo 9, which I teach you how to turn on. Put in your little buy and you ride it to the bank. Well, Bravo, that's 2008. What about today? Oh, I'll show you. It lines up perfectly. Oh, how about back in the day, the good old Rosh Hashanah back then? Here it is. I measured it for you. See that? From there, that's the month. October, it only lost 41%. But then you had a little rebound. But then it took out the rest of it, dropping almost 90%. Almost 41% on the way down. And then 20% on the way up. And then it's like, oh, we didn't pull everyone into their diamond hands. We got to keep getting their diamond hands, right? Look at this, 90% wiped out. Good swing trade, though, if you waited. You just wait a little bit. Also, from the Department of the Treasury, the panic of 1837. You know what they're saying? But we had a what? Here, you can't see it. My hair's in the way. A banking crisis. Oh, are we there yet, Jamie Dimon? And they warned. Now, this goes back to forever, since America was built. It is about the banks and how much money that they can fleece from the people, because the people don't even know. And I've never even met a person that even knows where money comes from. I mean, I do, but when I ask the question, they're like, that's a crazy one. Now, Jamie Dimon blasts higher capital requirements. Now, I don't want to get into it, but basically what is happening and what is going on with the Fed and the requirements and the banks and Washington is they're tightening and they're lending standards on how they need to lend, which right now they can't lend. They're not lending. I could show you the charts. I'm just not interested. It's basically the line is to the point where they're not making any money, so they're not going to lend. And where does money come from? It comes from the banks. And he knows this. He knows this. And he's going to take advantage of everything that's going to happen. He knows, I know, the Fed knows. That's why all Fed officials were out of the market. If I go back to the chart, you know, the very top, right? December, they were all out. And they all got busted for it. But thank goodness that they have their own watchdog, right? That said, no, you're fine. You traded equities right at the exact perfect time. And then what's going to happen? I mean, it's like clockwork. And I'm trying to encourage you maybe to have some wisdom on where to move your assets, if you have any assets left. So we're going to go all the way down, okay? They're going to make money all the way down. Then they're going to buy at the bottom, okay? And then they're going to make a lot of money on the way up. All because of this guy, right? Right there. Yep. He is in charge. He is the ringmaster. He knows how this game is played. And that's why the people at the Fed were like, okay, well, I guess I have to quit. I guess I got caught with my pants down. Do you not think with interest rates? Now, what are we at? 7% now? Oh yeah, money's really being lent. No, it's not. So all of the banks, well, not the primary lenders. It's the other ones. Those are the ones that are going to fail. And you're going to see that in the news. Not yet, but it's coming because they're not lending and they can't make money. And so they're all going to go broke. But the people like Jamie Dimon, they're going to survive. It's going to be like the non-primary lenders like Rocket Mortgage. And they're going to come out with these really risky programs, which I can go back to the Great Depression. I can go back to the panics. I can go back to all 2008. This is when all of the risky mortgages, like actually B of A, hey, you want a free loan, kids? And this is where they pull in all of the dum-dums. And if you do it now, you're gonna lose everything. And they're gonna make everything. And they're gonna buy all of the properties just like they did back in '08, pennies on the dollar, and the cycle repeats. So if you're asking me, should I go buy right now? My answer is no. Look, Bank of America, hear it? Bank of America, new home loan program. Oh, great. What? Lets borrowers buy homes in select cities like Los Angeles with zero down and no closing costs. Free homes for all. And actually, I don't even think you need a credit score. You just walk in and take what you want. The only problem is you gotta pay back the $2 million with interest over 30 years. And if you don't, well, then you're in trouble. And that's because you're going to lose your job, because that's how it is. They tighten, they say it. You're all going to lose your job. But it's okay. We have to, because we have inflation that we created. Okay. And look. This is today's story. Bloomberg. Goldman. More bank stories. To cut several hundred jobs starting this month. Yes, and then it's going to be several more hundred, and other companies, several thousand. I mean, Amazon just cut 1,000. Poof. No, and are people hiring right now? No, because they know what's coming. But Bravo, you speak of you try to be funny too. You're not funny. You speak of stock market crashes, housing market crashes, and wars. I don't see a war. Oh, okay. We'll give it 2 months. Suburban president warns. I mean, look what Vlad was just saying yesterday. He said, I'm not bluffing, which usually means you're bluffing, that I'm going to use nukes. He's done. It's done. Like take a break. Great world conflict within 2 months, because it always ends in a war after an 80-year cycle. Just like every 80-year cycle, or 7-year cycle, or 20-year cycle, which we are in an 80, a 20, a 7, Rosh Hashanah, everything. The stars are lining. It's all happening. What else am I missing? Oh, Shemitah, that's 7. We have Jubilee, that's 50. Like, come on. And you got a lot of bad stuff going on, like breaking news, DocuSign. Oh, they ditched their CEO. Names former Google. Oh, hey, Alan, good job. Turkey cuts interest rates again as country struggles under 80% inflation. How would you like to try 80%? And it's cutting interest rates. Huh. I think you guys are doing it bass-ackwards. So you have countries doing everything bass-ackwards, cutting when they should be raising. People not getting hired. Oh, breaking news. Facebook quietly reduces staff cost-cutting push. Looking to reduce 10%. But bravo, we're not even in a recession. Guys, just because they tell you that interest rates inflation is at 0, right? That's what politicians tell you. Inflation's at 0. Actually, inflation's only an inch. And I say, I can't do much with an inch. Powell signals recession. Maybe price to pay for crushing inflation. Yes, we're in a recession. Let's talk a depression, because that's where we're going. But where I want to go is back to the charts one more time. I have a line in the sand for you. Man, hopefully you guys, you liked, you subscribed. Sorry about the comment section. I don't know what YouTube's doing. Oh, hey. Oh, are we on the monthly? I want the daily. You can still see it on the monthly. Oh, the monthly, we got Kiss of Death. See the blue line? You cross that, we're going to cross it. We're going so much lower. Look how close. How much more time until the bottom falls out? I'm sorry, percentage. I think we got about 4% left. See that? See that little blue line? Here, I'll measure it for you. I'll help you. But if you take my course, you learn how to do it. All right, so you can do it for yourself. All right, so you're currently 2.89% away. Line in the sand. You break that, that's Kiss of Death. Guess what happened the last time we had a Kiss of Death? 2008. Oh, hey, coinky dink, right? Rewind my videos on Kiss of Death so you learned it. It's an all-time high. It gets beat down. It's on the monthly. It comes up, it touches it, can't get above it, it falls. You got to break that line. Once you break that line, Kiss of Death confirmed. We drop far, 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 far away. But I mean, not that far away. We drop down to this next blue line. And just to let you know, once we cross it, which I keep having to move this. Here, let me move that right there. Let me move that up. So you always know how far. Yeah, 2.2, almost 3%. Which it'll drop, hit it, bounce it. It's going to find support on that. It breaks it, come up, retest. That's when the bottom falls out. You go down here, and that's you losing a lot of money in the market, which I don't want happening. But the last 19 bear markets, I wrote that down for you. 289 days, 37%. But I think this one might give 1929 a run for its money. And like always, I apologize for all those digits going in the wrong direction, your house going in the wrong direction. If you subscribe to my channel, you're going to learn about this, and you're going to learn how to make money on the way down. And if you're not learning how to make money on the way down, quick, hurry up, and I'll see you tomorrow.